What's on the minds of top producers in the coronavirus world? Today we're going to be talking to Mark Raskin, one of our stalwarts in the industry, a top producer, a true leader in the industry, and this is the Mortgage Banking live stream. Welcome. This is the Mortgage Banking live stream. Today is July 15th, 2020. We are here to connect you. We're here to educate. We're here to entertain. Today, we're going to be talking about some regulatory updates. We're going to talk to one of our true industry leaders, Mark Raskin of PrimeLending. And before we get started, let me just say that a couple shouts out I need to give. For the TMBA, the Texas MBA, you know that I'm a big fan of the Texas MBA and very, very active there, as is Mark, who will be joining us in a few minutes. TMBA is having a fantastic webinar you should take a look at. It's on July 22nd. The title is MSR's Forbearance and Servicing Cash Flows. They're going to have a couple speakers on there, somebody from Carrington, somebody from Stratmore. It's something you'll definitely want to pay attention to. Sign up for it now. And also, the Texas MBA has announced that it's the Mortgage Symposium and also Reverse Mortgage Day have been transformed into a virtual conference, and it's been being moved. Previously, it was in September, you recall. It's being moved to November, so watch out for that. If you've already registered, fantastic. If you haven't registered, you got a little more time now, and it will be a virtual experience. Keep everybody safe. Still going to have great content and still going to have great people at that conference. And now to even be less expensive because you won't have to travel. Although we do miss seeing everybody in person, of course. Ariel Gilman, Paul Kanag, thank you very much. Quick update on regulatory and legal, and then we'll get to talking to Mark. HUD has just proposed some significant changes to its HUD handbook. So, and this particular section, this is the HUD handbook 4000.1 for those people who are involved in the compliance side. So in that HUD handbook, in the servicing and the loss mitigation sections, HUD is proposing some pretty significant changes into that handbook. So they're giving 60 days for people to comment. Comment deadline is September 12th. Take a look at that, get in there. They had some great goals. I mean, we have some fantastic leadership at the moment at HUD, people who are very knowledgeable. Brian Montgomery, of course, is there. And some of the goals they talk about are getting rid of unnecessary barriers for homeowners that are seeking relief, making the HUD handbook consistent with industry best practices, standards, and also reducing the burden on servicers who are working with FHA loans. So the best place for HUD to learn what is important in the industry is you. So get in there, get some comments in. They really need your input, and that's something you'll want to get involved in. Mortgage Bankers Association is definitely, and the other trade associations are definitely attuned to this, and so you can get active that way too. One other comment before we get over to talk on the business side is the California AG's office has released some CCPA FAQs, long awaited, and you should take a look at those. Anybody who does business with somebody who is a resident in California, and this is far reaching, of course, you'll need to take a look at those FAQs. Very important. If you need the links to it, just give me a holler. You can text me, you can email me. I'll send you the information. One more shout out here before we get going. Joy Huska, thank you very much. Elin Tomasdottir, thank you as well. And I just want to tell you that housing, as we know, remains strong. There was a lot of, as you know, there's a lot of controversy and there was a lot of upheaval at the beginning of the year here. But housing at the moment remains strong. Rates are good. NAR is reporting good data, and so are the National Association of Home Builders and similar associations. So with that context, let's bring in Mark Raskin, who is a longtime friend and a true gem in the industry. I can't say enough good words about you, Mark. Former president of Texas MBA, this association that I love. I know you're active in that all the time, and a superstar over at PrimeLending. Mark, welcome to the show.
Well, thank you, Troy. It's a pleasure to be on.
So Mark, in this world, what is on the minds of top producers like yourself in, with the coronavirus world, but also fantastic rates and a housing market that is in evolution?
Well, we're secretly wanting rates to pop up about 200 basis points for about a week or two, just so we can catch our breath, for starters. It's been a little crazy since early March, as you are fully aware. We've had 4 months of just going nonstop, far busier than even after the boom that we had, 10, 12 years ago when things kicked in. It's been a little crazy.
Yeah, I can imagine. So in this type of an environment, I know that there's a lot of technology plays in place and everybody's evolving, but most people are, at least at the moment, still at home. How do you do loans in this type of environment?
Well, we deal with two different sets of folks that we're trying to connect with. One are real estate agents and other referral partners. We're obviously not having face-to-face meetings with those folks. We're doing a lot of Zoom meetings similar to this, and virtual happy hours and virtual breakfasts and things like that. We're getting involved in a lot more training sessions where we're popping onto Zoom calls like this, which is actually helped us versus having the face-to-face contact. From a client perspective, a borrower perspective, things really haven't changed because we've evolved into having, in most cases, we don't meet the client unless it's a past client until the day of closing when we go to the title company. Everything is done remotely, electronically, over the phone, text, email, et cetera. So the only thing that's really changed from a client connection perspective is we're not going to closings because while we are considered essential, title companies do not want to have non-essential folks showing up in the closing room. It's just more chairs and desks to clean off, obviously. And even a lot of those have changed because we've, at PrimeLending, we've been having hybrid e-closings now going on 2 years. At least here in Texas, we rolled it out nationwide as soon as the COVID thing hit. So we're allowing the borrowers to e-sign all non-notarized documents, while they're having their morning cup of coffee before they go meet with the notary. And then most title companies are actually giving the option of the clients coming in, or they're just sending a notary to their house. And so we're available via telephone if they have any questions on that. But the closings have cut down from the normal 1 hour to probably 15 minutes, since all they're having to do is sign the notarized documents at closing. So it's really helped out a bunch. We're hopefully going to be testing here in Texas starting next week our first remote online notary closing. Obviously, conventional, conforming, simple text is loan. And we're hoping as we get the bugs out of that system, more states will come on board. And while Fannie and Freddie allow, we're hoping more servicers and other products will start allowing it soon enough too. That my goal by the end of the year is I'm hoping just about every loan can be done via remote online notary in case this goes on, or if we end up having to deal with a COVID-21 in a couple of years or something else, we need to be prepared for a situation like that.
Yeah, that makes a lot of sense. So with that in mind, though, it would seem like a lot of borrowers would have some anxiousness. Now, I know you and I both are in the DFW area, and some people are very concerned about COVID, and other people seem to think that it's over, or that it wasn't ever really all that dangerous. But are you running into people that have issues, like don't want to reach out and go through the process?
Shockingly, most people are not worried about it. The few that are, we are having the notaries literally meet them out front of their houses, obviously not on 50A6 transactions, but having the notaries meet them out front on their porch. And if somebody is super concerned or if they're of high risk, we're suggesting they bring their own pen. We're telling them make sure it's a blue pen and bring your own pen out there. That way you're not having to touch anything. Right. And hold your driver's license up and they can take a picture of it for their, for the proof of ID. So I haven't had anybody not want to close or not want to move forward because of the fear at all. And I'm shocked at how once Texas opened back up couple months ago, I'm shocked at how quick people are out shopping for houses. We are on the purchase side. We're busier now than we normally are in the spring market, and I'm guessing we're just playing catch up because we lost March and April.
Right.
For people out shopping for homes, but it's crazy the amount of folks that are out shopping for homes right now.
Yeah, it's hard for me to imagine that it's July, mid-July, and so the people that want to move before school starts, time's up, right? And it doesn't surprise me that that's going on. I know around in my neighborhood too, there's just things stay on the market very briefly, and
Right.
There's a lot of sales going on, both in the new home context and also in the resales, it seems.
We're seeing on both ends, at least here in the North Texas market, we're seeing on new construction as well as the resales.
Yeah.
We are. The good news is that people that are out shopping for homes and the people that are out doing their looking at open houses, you don't have the tire kickers, so to speak, that are just bored on a Saturday afternoon.
Oh, right.
Because of the protocol that they have to go through. And a lot of sellers and listing agents are even requiring people show proof of a qualification letter before they even let them come through, just because they don't want to go through the cleaning process. So we actually are seeing people that are true buyers and not just bored folks that need to be going to a park or a movie theater instead of wasting a realtor's time on the weekend. Exactly.
Yeah, so making it a lot more efficient. And you're saying that the closings are getting more efficient too. That's all of that sounds actually pretty good. I know that they're of course the COVID issues create a pretty grim scenario for a lot of reasons, and of course there are a lot of people that have suffered greatly. But some of the silver linings seem to be that people are thinking through ways to do business that probably long term helps out, like you say, if there's a COVID-21, or just being more efficient, or figuring out new ways to work that people catch the flu as well, and
Right.
keeping us safe long term is a good thing. I think it's
it's as an industry, both internally and externally, we've become far more efficient. I'm noticing that more lenders, just because of the backlogs in underwriting and closing and everything else, that the companies are looking for different ways to simplify the process. So, spending more time making sure that originators and processors are familiar with day one certainty and other things like that, so that we can take a 5-minute step out of the process or out of the underwriting side of things, multiplied by the volume that we have right now due to the backlog that every company has within the industry. It's just forcing everybody to get a lot more efficient. Something we should have been doing all along as a company, just like we should have had the remote online notary up as an industry long before COVID was ever known.
Right. That's right. Well,
but if it helps us, it helps us. So.
Right. That's true, and I mean, it's the silver lining perhaps, but definitely long term, I think it'll be helpful. So you're out on the front lines. What do you say? Some of our viewers are in the C-suite types of positions. What is it that you would tell like a president or a head of national sales or chief compliance officer? What sorts of things would you say to these types of people for what you see and how things could be better, and what people should be doing?
Number one, they need to love on their people, because if they're not backed up in processing, underwriting, and closing, then there's something wrong with their model right now, because they should be. And companies, including ours, are obviously trying to hire underwriters and closers and processors left and right. So love on your people, because if you're not, somebody else will be.
Yeah.
So that would be my number one. I would also encourage, you have to do this in a targeted method, that we're forcing people to take breaks, because if you think about it, nobody could go anywhere for most of the country for 2 or 3 months. So spring breaks were thrown out, early summer breaks were thrown out, and people are burned out. I mean, yes, everyone's making more money, but people are truly burned out. So encouraging people to take time off, even if they're not going anywhere, if they're too concerned for whatever reason, they've got to take a break. It's just we don't need to have other health issues hit folks within our industry over and above the COVID just because of stress or burnout.
Yeah, for sure. And the business will be there long term anyway, right? So
there's no question about it, and we're making sure that we're managing expectations up front when we're talking to clients and realtors and the likes, because just to give you an example, appraisals in the North Texas market for a normal house, you used to get those back in 3 to 5 days. Even if there's a holiday weekend in there, they're easily taking 2 weeks or longer. So we're going out of our way to make sure we set expectations, because if we need that done before we can do final underwriting,
right.
We don't want realtors making promises and, they'll close to you by the end of the month, and it's now the 15th of the month. And if we need an appraisal, that makes it just a little bit, it was doable 3 or 4 months ago, but it makes it a little bit more challenging in the current environment. So just going out of our way to set expectations and making sure that, going back to the C-suite folks on the call, making sure that the number one of all their conference calls internally is making sure people are setting expectations. And that starts with your operation folks setting expectations for the originators and processors up front, so that they know what they can go out and sell, even if they don't like what they're being told.
Right. Actually, it sounds like a conversation I had with my daughter last night. I don't care what time you come home, just tell me and make sure that you're home at that time.
Exactly. It's all about setting expectations.
Yeah, that's right. Well, so what? Any other thoughts for the C-suite types?
For the C-suite, just constant communication. I mean, we set up when the jumbo market started vaporizing early on in this COVID environment. We started setting up weekly calls with our capital markets and head of all of production. And even though the jumbo market has pretty much come back, we're still having these calls every week to every other week, where they're truly heart-to-heart calls. We'll have the head of credit underwriting on the call, or capital markets, or what have you, and just constant communication. We need it now more than any time, because since most of us are working from home still, we're not getting the information around the water cooler like might have taken place prior to March. So they really need to be strategically, proactively reaching out and having those conversations, either individually with your key performers or as a group with the whole company. And we're doing the same thing within the branch with all of our, the loan officers, processors, et cetera, on a regular basis. It just, you don't want people to veer off just because they're working from home if they get bored or burned out.
Yeah, that makes a lot of sense. Yeah, my law firm is also virtual and has been for several years, and it, it's the same sort of thing. It's a different way of operating, and so you really got to make an effort to veer away from the traditional interactions and nurture those relationships, because the relationships still got to be nurtured. You just got to figure out a different way to do them, and so we find
Yeah, I agree. Whoever's in charge of employee, not relations, but employees having fun and enjoying their jobs, there are a lot of other things that can be done. We've had virtual cooking contests. We have a virtual painting contest coming up next week. Just it doesn't have to be constant, but just doing things to get some internal camaraderie going on, and just for employee retention. I think those are key things, and the C-suite could be working on as well, just to get their minds off of how do we get one more loan through underwriting, or one more loan out the door for closing, or what have you.
Right. Well, what if we flip the lens around and talk to people who are sort of new to the business? Any thoughts there on for example, if I were a new loan officer and I got my license, say December or January, and then this thing hit, how do I form relationships if I'm trying to build my book of business?
Find somebody to mentor you. Would be the very first thing I would suggest doing. Folks, whether it's a refi or a purchase, they don't want to just because they like you or you're somebody's son or daughter, they don't want to trust you with personal financial information if they have the slightest bit of doubt in your knowledge of the industry. So partner up with somebody that's senior that you click with, that understands that you're not wanting to work under their mentorship forever, but at least you can do that for a year or two, and that way your connections along with their expertise will help drive some clients to the door. Plus, in a lot of situations like that, a senior loan officer will be able to flip some clients over to help train you as well, versus you just try to hit the street running by yourself. I think that would be a very difficult thing to do at this point if you didn't have some sort of a mentor to help work with you. Yeah. Same thing with real estate agents. A new real estate agent would need to partner up with a senior real estate agent so that it gives confidence to you and I as consumers that this person truly knows how to handle most every situation that can pop up.
Yeah, that makes a lot of sense. And if we took Mark, when you first started in the business, and you put yourself with this knowledge now that you've been doing this at least 15 years.
Yeah, close to 20.
I know. Just trying to be delicate. So if we take you, Mark, and put you back at the very beginning when you first started in this industry, what would you do? Would you become a loan officer? Would you become a process? What you know a lot about this industry now. What would you do?
The only thing I would do differently, I think, is I would probably have started out as a processor just to learn that, or even an underwriter just for a short period of time. My personality would not let me do that for very long, I can assure you, but it would have made me a better loan officer. When I started out, and I did go under a friend of mine who mentored me, did an awesome job, learned quite a bit, but back then for an 8 hiring rate, you could have just switched it to a Nina type loan. And that's pretty much, unless somebody was a W-2 employee with Texas Instruments or IBM or something, you did that with everybody, and the application was, here's the application, let's go to closing. I mean, there wasn't a lot to do, so because of it, there wasn't a lot to learn. Now there's a lot more detail to learn. So yeah, if it's there's a possibility to start out as a processor or even a loan setup before you started selling, I think it would make you a much better salesperson. I fortunately or unfortunately did not need to do that until the markets changed about 12 years ago.
Yeah,
and I had to learn pretty quick.
Yeah, it didn't give you a lot of room for error at that point.
Yeah, did a lot of reading.
That's right. Well, Mark, I know I'm taking up your time. Any other thoughts on things that people should be thinking about as again, one of our leading producers in the industry?
Just keep, anytime you see something coming out from MBA or the like, supporting, making remote online notary, which Texas is, most people I'm sure they're watching this know this, Texas was on the forefront, thanks to your help and John Fleming and everybody else down in Austin about 2.5 years ago. But anytime something comes up where we can encourage more servicers and other products / investors to allow it, it's pretty much the only industry I know of where it's not readily available across the board. And so we need to get to the point where that is the norm and not just a wishful thinking, a year or 2 or 5 down the line.
Yeah, and I know a lot of people are working on this, including yourself when you were president, and even after that at the Texas MBA. And
the other thing is, as you mentioned earlier in your call, for folks to stay involved, just because we can't get together at different training sessions, there's a lot of blood, sweat, and tears that go into these different seminars and sessions. So make sure you get involved. It's very easy to do. It's not like you have to drive or fly anywhere to participate in one.
Right.
But just making sure that the folks on this that are watching this are participating and supporting the different organizations out there that are putting a lot of training in place to help better us as an industry.
Yeah, it's very true. And I think that these days, because of the pandemic, again, the part of the silver lining is that things have become more efficient. So some people that may not have in the past had the capacity or the time to go into these conferences and the like, now there's lots of opportunity virtually to get involved, and you can make your voice heard and make sure that you take care of this industry. Yeah, those are awesome words. Those are awesome words. Well, good man. I do appreciate you coming on and talking with us. And
it was my pleasure.
Yeah, good luck with all the closings. I know you have a bunch, and I won't detain you further. Have a fantastic day and a great week.
All right, man. Thanks.
Yeah, you too.
Good to chat with you. Take care.
Take care. Bye now.